Hi, Aldrian. Hi, all. Um, Thank you for inviting me. It's a pleasure to give a talk here. I hope it will be benefit for your viewers. So let's go ahead. Thank you very
Yeah,
much.
yeah, it's truly an honor, man. Thank you for accepting our invite for this interview. And guys, before we start, I'd just like to remind everyone to tap the like, share the video to your trading, to your favorite trading group, rather, so you guys will be blessed with Ramesh's trading knowledge. Also, would like to announce that Forexway 2.0 is finally coming. You can exclusive content from top class traders and investors that is sure to bring your A game to the trading scene. Anyway, man, thank you so much for coming and for being on board today.
Thank
Anyway, how's it been going?
thank It's going great. The markets have been very volatile last few months. I mean, this year has been really bad. I mean, if you are an investor, but if you are a trader, there was a lot of volatility, and every
Mm,
trader loves volatility. So it's been a good ride. I think almost one three-fourth of the year has gone. So hopefully more
mhm.
volatility to come.
Right, right. I
Right.
mean, yeah, the trading gods has really blessed us with the volatility. I mean, coming
Yes.
from personal perspective, there were a lot of opportunities. The thing is, the intraday price swings lately has been really massive, and market
Mm-hmm.
just seems to come up with new opportunities every day. Anyway,
Yeah. Mm-hmm.
I'd like to know you better, man. The show is about you. Would it be okay if I could ask you some questions about your background?
Yeah.
And
Sure. Please
yeah,
go ahead. Please go ahead.
yeah,
Please.
awesome, man. So first and foremost,
Mm-hmm.
I've skimmed through your YouTube.
Mm-hmm.
It's time and price forecasting, by the way, guys. And could you tell us, how you started with your YouTube channel?
Oh, okay. So, I started. I'll just give you a brief background of my trading, and then probably we'll come to YouTube and all that other things later.
Okay, okay.
Yeah. So I started trading, when in around 2006, I was studying in my college, and my father used to do stock market trading.
Mm,
So he was an investor, not a trader. And if you remember 2000, I don't know whether you have seen the market, but 2004 to 2008 was a very
yeah.
big bull market. Yeah,
Mm-hmm.
everything was going up, and it was a great time to make a lot of money. So and as I got excited towards it, so I started handling my father's portfolio,
Mm,
and making him entering exit, and it was a great time. Anything you buy, it just goes up, during that period of time. Then came 2008, the biggest crash after 1929. So we took a big hit, because I mean, we were only buying, and the markets were going up. We never thought of selling or shorting the markets, because it was more from an investment perspective. So then I started learning those trades. So as any beginner, he'll start learning about trend lines. He'll start learning about indicators, RSI, MACD, that, and at that time the knowledge on the internet was not that great. So we used to read the books and try to understand. But eventually, if you want to make money in market, you need to have some unique edge. Now, RSI, everybody knows, like above 70, 80, you have to sell, and below 20. So you need to have your own edge. You need to, develop your own trading system, trading style. And more importantly, it's the brain, the mind, which needs to be developed. I mean, you can learn the strategies, you can learn the systems, but when it comes to trading, and when you see so many wild swings in the market, going up, coming down, that is where, the mind, if it is not prepared for it, you are bound to lose big amount of money. So we took big losses also, and but with God's grace, we were able to recover those losses, and then come, I mean, then kept on learning new things. Then I moved to Gan. I mean, WD Gan was one of the famous trader, and he used to focus a lot on time, because price, everybody knows, like, if price goes, this is the resistance, this is the support, and for a trader, every day is same. But if you follow GAN, or if you and the I mean, you move on to the next part, which is astrology, which is financial astrology, not human astrology. So basically, here we are focusing on the planets, how planets can impact the market. So we develop those edges. We see that they are great, and they give some great movement in the market. And from there, I started, because when I learned the knowledge here, it's the internet is full of things which are of no use. A lot of things are of no use, and I also went through the hard way. I learned wrong things, then I corrected it, and lost a lot of money in doing those wrong things. But eventually, someone was there to guide me off. There were few good persons who helped me out in learning GAN and astrology. So that is where the channel also came into place. So whatever knowledge I have, I try to share with small, short videos, so that people get to understand. It's not about making you profitable. It's more about developing the conviction on the strategy. Once the conviction is there, then you can scale up. So developing, because everybody thinks astrology, I mean, there are a lot of things, because Mr. WD Gann, he never wrote anything in black and white, like 1 + 1 = 2. He wrote everything, and it is he wanted the individual who's studying his science, who's studying his subject, to go explore and develop their own rules. So, and this is what every trader needs to be done. It's not like that what works for me will work for you, but at the end of the day, you need to develop some strategies, you need to develop an edge, and based on that, you need to develop your trading plan, trading system, and go ahead and take a trade. So that is how the channel came into picture. The social media came into picture, and 2020, when everyone was at home, locked in homes, you don't have anything. So at that point of time, I started my channel, and yeah, that's a brief history. You are on mute.
So right, so 2020 was the time you popped up on YouTube, if I'm not mistaken.
Yeah.
So imagine 16,000 subscribers in just 2 years, and you're in the trading league. That is amazing. And now we know your background on YouTube, and let's go dive deeper towards what you are, outside of YouTube. And may I ask, are you trading full time, or you're just trading, as part time, for an additional extra income?
No, so it's more about a full time. So we have both. We do trading, we do investing, we do a lot of investing also.
Hmm.
Looking for some good values which comes into the market, and we do trading also. Yeah. So so I do a lot of things. So I do. I have. I do coaching also. It's a mentoring on one-to-one basis. Then trading is something which I love. So
Hmm.
that is my first love. And then whatever income you make from trading, you need to compound it. So trading can create, wealth is always created by investing. So
Hmm.
whatever money you generate there, it's always good to put it in some good companies and let it compound over a period of time. That is how
Hmm.
most of the big traders and investors have evolved over a period of time.
Right, right. So now let's take a peek on your trading strategy. I mean,
Mhm.
um, you told us a brief history about your trading, what happened before, and how
Mhm.
you stumbled upon trading.
Mhm.
You mentioned that you had someone to guide you. So obviously you
Mhm.
had a mentor. So could you brief us through what made you want to stick with the strategy your mentor taught? I mean, there are a lot of mentors in the market. There are a lot
Mhm.
of mentors in the trading scene.
Mhm.
Why is that you decided to take on financial astrology, as what you've termed it?
Mhm.
Why is it that you decided to go with the Gantt chart instead of the usual price action stuff? So could you tell us more about that?
See, what happens is, now when we go to price action, mostly, I mean, most of the people in price action, they'll focus on candlesticks. There are 32 candlestick patterns, most widely followed. Moving
Mhm.
averages, you can go for 20, 50, 100, 200 day, or you can go for trend line support and resistance and all that.
Mhm.
But, if anyone go through his trading, and they will see like the biggest money is made in 20% of the trade. 80% you're just being there, being into the market, waiting for that big opportunity to come. Now, you know, so the mentor who groomed me over a period of time, he focused on one important thing, which is risk management. You
Mhm.
should know your risk. So basically, before you even enter a trade, you should know what is the risk you are carrying and what are the rewards which you can see as the trade progresses. You need
Mhm.
to trail your positions. You need to mature so that you are able to capture that big move. So what happens is with financial astrology, this is something which I call as a niche science. There are not many persons who follow it, and even if the person who follow it, they don't want to share it across on public platforms,
Mhm.
because a lot of people don't believe on astrology. It's as simple as that, because that is how it has been brought up. And even WD Can wrote in many of his books, like, people are not ready to accept it because it was considered as a black magic at that period of time. It was not considered as a science. Now, my mentor, so I went through the whole stages, going through price action, going through candlestick patterns and all that. But I was not getting the satisfaction because, I don't know why at certain point of time the market just goes in a big trending move. Other days it is just sideways. So I wanted to capture those big trending moves, and that is where, when certain particular aspects, certain particular planetary combinations, or certain mathematical calculations comes in place, it gives you that additional edge. And I followed it. I've seen it with my own eyes, and I've seen, like, I was anticipating a move, and that big move came. I was ready for it. So it gives me that additional edge that I can be ready. For me, every day is not simple. Same. There are few days which are very very important for me. Like going forward, 9th September is very very important day for me because there is some Mercury retrograde, Mercury ingress is happening. So I'm prepared for those dates, and I can prepare my whole year's plan well in advance. Okay, these are the dates. I have to be ready. I need to be prepared. I need to be at my full both in terms of my trading capital and my mental capital. And so that gives me that additional edge, and that is why I focus a lot. And the mentor who groomed me, he also, I've seen with my own eyes these things happening. So that is where the love starts. And once you stick to it, you just want to just keep the things going on.
Right. So done with the trading strategy. I mean, you obviously explained it well, but it's not you're not showing the entirety of the strategy, but generally you just gave an image to our viewers. But now I just like to ask.
At the end of the day, it's all about conviction. That is most important.
Yeah.
I can tell you hundreds of things, do this, do that, but till you don't see it with your own eyes, hundreds of times, because it has to build like a muscle memory. Trading is like just like any sports, competitive
Yeah.
sports. You have very less time to react, and with this automation algos in place, you don't, you cannot just, you have to think in matter of seconds. And that conviction cannot build because I'm telling you, or you're listening, or the viewers are listening. It comes with a lot of experience, it comes with a lot of practice. It has to be a muscle.
Right. So speaking of experience and practice, how long did it exactly take you to get where you are today? I mean, to become a profitable trader, how long did that exactly take you?
See, for me, it took around, I mean, I've been practicing this from 2015, so it's almost 7 years, and I'm still learning. There is no end to learning when it comes to, I mean, any aspect of your life. You have to be learner if you want to
Mhm.
keep evolve, because market keeps evolve every year. Last 2 years were trending. This week, this year is volatile. So the same strategy doesn't work. You have to keep modifying. So yeah, and it's a ever long learning process. See, at the end of the day, you can be in markets for 20 years, 30 years, or 1 year.
Mm-hmm.
The golden rule is you need to be very strong at your risk management. You need to be very strong at your, the position size. If you can follow these basic rules, you can be profitable. If you don't, if I from tomorrow onwards I see I don't follow my rules, I don't follow my discipline, I'm going to lose badly because markets are merciless. So there is no timeline when it comes to, like, if you want to be an engineer, it takes 4 years, 5 years.
Mm-hmm.
If you want to do some medical science, it takes 5 years, 10 years. But when it comes to stock market, there is no end to learning. You know. So a
Mm-hmm.
very simple example: I started my YouTube channel in 2020, having 17,000 subscribers. In that certain period, some people might have millions of subscribers. So it depends how you perceive things, what kind of dedication you give to it,
Mm-hmm.
and and how much discipline you are in following your approach.
Right. So I just like to give out the compliment. I love how you see things that trading is not time bounded, and much like any professions, it takes time, right?
Yeah.
So with that taking time, I hope our viewers who are listening right now I hope they would realize that trading is not something that you get accustomed to overnight. It's something that we it takes time, and much like when you're trying to learn trying to become a lawyer, trying to become a doctor, it would take 5 years, 8 years, 10 years of your time. And at
Mm.
your case, with someone who's already an absolute tank in the market, you're still learning to this date. And that's something that I admire about you, the honesty that you still learn something new. You claim that you don't know it all. That's something admirable about you, Ramesh. Anyway,
Thank you.
uh, if you have any advice for traders who are still starting out, what would that be?
See, first thing is, first, there are a lot of screenshots in social media, traders claiming that they made this money, that amount of money, that amount of money. And as a human, we generally get excited toward these kind of things. I would advise that cut that noise because you don't know how much that person struggled to reach to that level. Probably you're starting now, the person might be spending 10 years, 5 years, 1 year. We don't know what is the, struggle behind that. So always look at the struggle, don't look at the outcome, and always focus on the process. Don't look at your P&L. Okay, probably it might take 1 year, 2 year, 3 year for you to break even. But once you break even, once you reach that mindset, the mind, the capacity of your mind increases to that level, then whatever losses you made in next 2 3 years can be recovered in probably 1 month also, because you have developed that edge, you have developed that capacity within yourself. So
Mhm.
always focus on the process, don't look at the outcome. Just and stick to discipline. The discipline, see, trading is against human nature. It is a very very competitive profession. Only, I would say, 2% of the people out of 100 will be profitable. Yeah,
Mhm.
so it's a very very competitive. You need to, it's not like your simple 9 to 5 job. You come here, you do something, and you get your salary. Here you're not sure, by the end.
Yeah, man. I mean, for me, I mean, it's a market lately is, it's quite volatile. I mean, I'm a
Yeah.
funded trader from I was I was a funded trader from MFF, if you're familiar with MFF.
Uh-huh, yeah, yeah,
Yeah.
yeah. Hmm.
I just recently lost my my account just because
Oh.
I of the
Uh-huh.
volatility. There was a sudden gap up, and then unfortunately, MFF system, when it comes to gap ups, they can't do stop losses. I mean, the
Yeah,
stop losses don't work. So yeah,
right, right, they
violated
won't.
the rules.
Oh,
Yeah,
no problem, it's a learning curve. You will get
yeah,
a lot of
that's true. I
yeah.
mean, yeah, it's
Don't get
definitely true.
started.
But like what you said earlier, what you said earlier, every day you learn something new, and from there on, I decided to not keep a trade not longer than 3 hours.
Yeah, yeah, it happens. See, you will do mistakes, and
Yeah,
mistakes will happen. We also do mistakes till date, and that is part and parcel. The only thing is preserve your capital.
yeah,
Don't be a house, not be a gambler. So don't lose
yeah.
out your chips. Always think about protecting yourself. So that is why hedging is very. If you want to trade gap ups, have an hedge. With the options of futures. I don't know which instruments you trade, but you can
Hmm.
always create an hedge so that you don't lose an inordinate sum of money.
Hmm. Yeah, I mostly trade currencies and indices, but I want to know what market do you trade?
I trade Indian markets, so
Mm,
basically bank Nifty, and stocks in India. I
right.
don't trade. Yeah.
Okay, you trade mostly the Indian stock market. So how's the volatility? I mean, in the Philippines, I'm from the Philippines. The
Uh-huh.
stock market isn't the best place to trade in our country. How about in India?
Uh-huh.
How's the volatility in?
Yeah, it's highly volatile. Like I think yesterday the market was up 3%, and tomorrow it will again go down 3%. So
Oh
it's
wow,
highly volatile. Yeah, yeah.
oh
So,
that's amazing.
anytime the market, see, volatility is part and parcel of trading. That is where the major funds, they will come in. They love volatility so that they can get their I mean their stocks at a cheaper rate. So it's part and parcel. They see, market runs in cycles. It will go up, it will be volatile, it
Mhm,
will be sideways, it will be trending. You need to understand which cycle we are into. And you
mhm,
can be right, you cannot be right all the times, but if you know, at least okay, we are in a volatile cycle, so I have to avoid taking overnight positions. I have to mostly cut my trades in intraday.
mhm.
So yeah, that is how you have to evolve, and you have to see what market is giving you signals and take it. Don't think what you are thinking, because that is where things will get messy.
Okay, I need to write that down. Don't think what you're thinking.
Yeah, you,
That's
you cannot
actually
be
a good
biased,
quote.
because your mind will always see. I'll tell you, it's a basic rule of human mind. Like if you want to go long, if the markets are falling, you'll always think about going long. If markets are
Mhm,
rising, you always want to short. So that is how most of the traders think, and that is how our mind thinks. And that is where, if you need to have a set of rules which will guide you. Okay, boss, this is what I need to follow. Whatever my mind thinks, it's fine. I don't care. I need to follow my system, my framework of rules. Then only things will be made, money will be made.
true. Yeah. Well, okay. Wow. You're spitting bars here. I mean, every line there's something to quote.
Yeah, the
Uh
years of experience.
yeah, yeah. Truly. I mean, it's really evident.
Yeah.
Okay. Anyway,
Hmm.
I think Rivas fixed the problem. So now, I mean, last question was about about traders starting out. Obviously, from on Forexway, most of our viewers are still new to the market, still new to the trading scene. I think this will be
Uh-huh.
my last question before you proceed.
Uh-huh.
Our our viewers are still new to the trading scene. They still don't have the right experience. I know you're gonna brief us on what the market would be on the next following months with your presentation, but what's your general investing and trading strategy considering record-breaking inflation on global markets that have been going through lately?
See, first thing you need to understand, if you really want to be a good trader, stop seeing what economists are saying, stop reading newspapers, thinking
Mm-hmm.
that the market's inflation is high. I mean, if you see, we were in the middle of the biggest pandemic of the century, right? And
Yeah,
the markets were at all-time highs. I mean, which is
right.
irrational, right? So the thing is, inflation is high, and for me, if you consider my personal view, market loves inflation, and that is where, if you like, at least for Indian market, they're going up. I mean, they're outperforming a lot of US and European markets. Every market has their own issues, own problems. But what I would advise you is, stop looking at news, stop what others are saying, develop a system, stick to the rules, and the money will come to you. Because if I mean, I think so many economists, if you just go and read from 2010 to 2018, people were saying the economy is going to crash, this, that, and all that stuff. The economy keeps growing. No one knows what is going to happen next. See, I also don't know what is going to happen in market tomorrow. So we have to be reactive, not be predictive. And the day you become reactive, you start listening to the market, you start accepting what market is giving you. Okay, markets want to go up, but your mind is saying go short. But if the framework is saying go long. Whatever you will say, whatever you will think, the market will be always be against you, over a period of time. So stop looking at news, stop looking at newspapers, what others are saying, what economists are saying, inflation is high, low, and all that stuff. It's of no use when it comes to trading. Because the trading, most important thing is your framework, your strategy, your thought process. And you need to make sure that you are never against the trend of the market. If the market is bullish, and just to find a bullish and bearish trend, if you are an intraday trader, just apply a 20-day moving average. If the markets are above that particular average, mostly it is on the bullish side, and try to trade on the long side. And below 20-day moving average, try to be on the shorter side. You will have stop losses, but eventually you will be, most of the times you will be with the market trend. Yeah. Mm. Hello. All right, no worries, I'll wait. Mm.
Hello.
Hello.
Is it just me or Zoom is acting up a bit,
Yeah,
or
it
was it
happened.
me?
Yeah.
Yeah, you got disconnected. I mean, the internet was working fine. Um, yeah. So I guess we could hold on. Could you guys see me? Do you guys
No,
still see me?
no. Yeah, now I can see you. Yeah.
Okay. Yeah.
Mm.
So yeah, I got disconnected. I'm really sorry. Zoom is kind of acting up a bit.
No, no worries. It's
Yeah.
fine. Yeah. Mm.
Yeah. So maybe we could proceed with yeah. So the small talk is done. Obviously, the people know you now. The
Yeah.
people knows your knowledge, your wisdom about the market, your credibility. So that small talk probably gave justice to them that now that they know you well. So maybe you could proceed with the presentation you prepared for our viewers.
Yeah, sure, sure. So,
Awesome, Ramesh. So yeah. So I'm gonna turn off my cam and take the floor away.
yeah, sure. Thank you, Aldrin. So my presentation is mostly on the psychological aspect, which I feel is the most neglected aspect when it comes to trading. So I have summarized a kind of framework you can follow on your psychology, on your mindset, to develop a trading brain, or to develop a trading mindset, which will help you, evolve as a trader. Because you can learn strategies. I mean, that's a saying by one of my guru. like strategies don't make money, it is the person or the trader who makes money. And if you really want to be a successful trader, you need to develop your psychology, you need to develop your mindset, when it comes to profit, how to write that profit, and when it comes to losses, how to exit in minimum losses. So my presentation name is let the trading and psychology work for you. So I'll move on to the next slide, and we'll quickly see how it's going. So probably if you're new or you're pro, you might have done all this stuff: cut winning trade short, fail to pull the trigger on a perfectly good trade setup, let losing trades run, hoping for return to break even. I think this many of you have done. You are in losses, you let the trade, hope that it will come in your favor. 10 out of 2 trades will come in your favor, and 8 trades which doesn't come, they blow off your trading account. Add it to a losing position, you try to average your losers, become more aggressive after losing money, mostly revenge trading. Took some unplanned trades, what we call as impulsive trades, and you reduce or increase your trading size after a loss, and increase your trade size, held the trades longer, failed to take a perfectly sound setup because last 2 trades were loser. I think this would have happened with a lot of traders. After a long day of big profits, your confidence and your trading suffered. After you make some big profits, you become overconfident and you tend to, do some things or some impulsive trades, which led to, which let you lose all your gains which you have made, and consistently made small money, but unable to scale out or elevate your trading. I think most of you have done it, and this is what trading is all about. 95% lose money. You might have a higher IQ, you might have the highest education, you might be a Harvard or a Harvard pass out or a big B school pass out, but still you are losing money. You have a very good capital, but still you're blowing off every day. You might be 10, 20, 30 years in market, but still you might be a loser. And you might be very ambitious, I will do this, I'll do that, but when it comes to real trades, you end up losing a big chunk of your capital. All this doesn't guarantee that you will be in the top 5% of successful traders throughout the world. And why trading is easy, what people, why this failure rate is so high, because people, there is a framework developed, like trading is easy. When you see those big screenshots of profits, it gives you freedom. I don't have to worry about my boss, I don't have a 9 to 5 job. I mean, you just open a chart before. If you're not trading, I could have bought here, I could have sold here, I could make millions and billions of dollars. And trading, this is the game. This is just a game. It's not a profession. And these are all self deception. These are not reality. In reality, trading is very difficult. It's very competitive. It's just like tennis or cricket or basketball. Very few people can reach that ultimate zenith. Trading doesn't guarantee freedom. It causes a lot of psychological issues. You will have, once you make losses, you will have frustration, you irritation, and that will mostly take it out from your family or the person who love you the most. So it creates a lot of psychological issues. It is high risk of you can lose everything because there is no asset. It's just your capital and the person who are against you, which are the big fund managers who are there to take off your capital. You can lose your whole capital. Probably a lot of people would have done. They've lost capital. They again come back. Again they lost. And trading is a business. It's a business. So you will have losses. You will have profit. There is only no profit, no loss. You will have big losses. You'll make some good money. But at the end of the day, it's just a business. You have to treat it like a business. And this is the emotional. I think if you can see this presentation, you might have gone through these phases during the high volatile. Whenever the markets are highly volatile, you might have be very in an elevated stage, or you might have come down, depression. So stress and everything will be there. And trading releases a lot of stress hormones. Basically most of the I mean, most of the people who are trading, they're emotional traders. They don't trade on a framework. They just think, okay, the markets are going up, let's buy. The markets are coming down, let's sell. So basically, an emotional trading will always lead to losses. And you can see here, whenever you have you take emotional decisions, you develop some stress hormones, which are these cortisols. And whenever you have these kind of hormones taking over you, you're bound to take emotional decisions. And when you take emotional decisions, it will take to trading losses. It will take, I mean, your health will take a, you will have this blood pressure, diabetes, all those problems because of the stress you are taking. and you will not be able to sleep properly. You always want to be in the market, so all that stuff will happen. So make sure that this emotional trading is avoided at any cost. How to do that we'll discuss. What is needed to be a successful trader: 80% psychology, 20% trading system. And struggling traders almost always blame the market. Start being responsible. Yes, I have done the losses, I am responsible for it. What I can do to improve myself? If you start developing that thought process, then only you will start evolving as a trader. Otherwise what will happen? You will blame, okay, market, fed, central bankers, or some insiders are taking care of me, someone knows my position. You will create all kind of excuses. But markets are merciless, they don't care about you, me, or anyone. If you follow the trend, you will make money. If not, you will be, it's just like a wild elephant. If you come in front of a wild elephant, just imagine where you will be. And successful trading is about how you manage your trade. Once you get into it, manage your emotions around that trade and properly manage your capital and risk. This is what, in summary of my last many years of experience, successful trading is how you manage a trade once you get into it. It's all about trade management. Manage your emotions. Market just goes up 2 points, you want to book profit. But if it is giving more, take it based on your trading system. Properly manage your capital and your risk. Probably you might have 100, let's suppose $100, you risk everything, and next day, like, market opens gap up, you lose out every out. So you have to manage your capital and risk together. So these are the five ingredients of trading success. One is belief. Develop a belief within yourself, your money relationship, emotional awareness, your routines which you need to follow day in day out, just like any athlete will follow its routine day in day out, and positive mentality and attitude can win commitment. So this is a very important slide. You can just take a screenshot of this slide, keep it on a trading desk. You need to work on these five things if you really want to be a successful trader. So what is positive mentality? Like, if you see this cup, it is half full or half empty. So a trader attitude is basically, you need to develop a positive attitude. Even if you're losing, you need to develop that positive attitude. A trader's mentality or attitude is the backbone of his or her trading psychology, because this is the trader's attitude will determine the very first image he or she holds in subconscious mind. We do trading from our subconscious mind. Most of the things which you do in our life is from subconscious mind. Very few stuff you will start thinking consciously. So develop a positive image, conscious image about yourself. Yes, I'm a successful trader. I will make money from the market. I will follow my process. So what we have done is, you need to develop the can attitude instead of want. I want this. No, I can do this. Building a can attitude towards a trading career is essential for a trading success. So I need to develop, I can win, I can make money out of the market, I can follow my discipline, I can follow my process. So instead of want, I want this, start substituting with can. So that will start developing the positive attitude towards market. Never give up. You might have bad days, you might have bad months, you might have bad years, but if you really want to be a successful trader, the passion is there within you, you should never give up. But yes, having said that, never give up doesn't mean that just you come keep doing the same mistakes again and again. You need to avoid it at any cost. If you have done a mistake, learn from it and make sure that mistakes is not repeated again. If you are doing it, fulfilled of energy, positive energy. You need to keep your emotions in check. You need to be creative. You need to start imagining what kind of moves the market can make. You need to start developing a trading framework around that. So you need to have that commitment. Time is one. Yes, I can give time. Money everyone can give, but emotions and creativity. So next slide. This is the emotional awareness. Most of the, you need to be, whether I'm happy, excited, tender, scared, angry, and is something, he will not be bounded by these emotions. He will be very fearless. For successful trader, the PNL, they will never see their PNL. They'll just focus on the price, or their process. Okay, I need to buy, I'll buy. I need to sell, I'll sell. I've taken a big loss, it doesn't bother them, because they have that money relationship that these losses will not bother them. And they are very very clear about their emotional awareness, where in which emotions they are. If you're feeling really sad and angry, then I would advise you don't go ahead and take a trade. If you're very excited, don't go ahead and take a trade. You need to be very calm and composed if you really want to be a successful trader. So make sure that you know which emotion you are into at the current moment when you are trading. So basically, trading is about indecisiveness and regret. So trading is regret is part and parcel of trading. You exit early, you have regret. You exit late, you have regret. Indecisiveness: should I buy? Should I sell? Should I hold? So that is where the framework comes into picture. Okay, this is where I have to enter. This is where I have to exit. This is where I have to book my losses or book my profits. If you are clear with this framework, you will start taking care of these two things, which is regret and indecisiveness. Always remember, you will not sell at the top, you will not buy at the bottom. You will want to capture in between. So if there is a trend of 100, so you will, if you are able to capture 50 to 60% of the trend, you are one of the best traders, because 20% is for stop loss hunters, 20% is for the market makers. So remaining 60% is what you want to capture. If you are able to capture it, you will do absolutely fantastic in your trading. Second is prevention. Prevention is always better than cause. So how to develop that emotional awareness is only by practice. Learning to control your emotion requires persistence. Over a period of time, you will start to perceive the benefits of keeping your emotions under control. Yeah, so you need to develop your emotion. You need to keep your emotions under control. And once you start doing it with practice, you are always composed when you're trading. Neither you're very excited nor you're very depressed if the market position is against you. You're composed. If you're composed, you are able to take go on to the next trade without having any hesitation. So prevention, practice getting emotional, practice feeling emotional turmoil. You start imagine mind really doesn't know the difference between reality and virtual world. So imagine the scenario in your mind. Okay, I've taken a position. Tomorrow it is going to open gap up. What I will do? That emotional turmoil, which you will, how will you react to it? So if you start imagining these scenarios way before, your trading becomes super efficient. Why? Because you will have already gone through those scenarios. It's something not new to happening to you. When something new is not happening to you, you know how to react to it. So that is why if you see a lot of firms do fire drill training, so that when the fire really comes, you know how to act. So similarly, these are the preventions. Prevention: practice getting emotional, practice getting feeling emotional turmoil, practicing being aware of your heartbeats. You know, so many smartwatches are there. Just wear during trading hours. If you see that it is crossing 100 bps per second or minute, I need to calm down. I need to take a breathe, or need to do some breathing exercise. And this is the most important line: it can be slow and painful learning process, but the rewards of knowing your emotion is just too great to be ignored. Read this again and again. You will understand what is, the real meaning of this line. Prevention tricks. So always take a walk after every trade, be it positive, profitable or loss making. Take a walk. It give yourself a break, and listen to music. If that calms you down, it will help you to keep more relaxed. And stop trading after three consecutive wins or losses, so that you don't go to very super excited mode. You're bound to do mistakes. Or if you're taking a big loss, you are in a depressive mode. Make sure that you don't over leverage or go into revenge trading. So these are the steps which you can do. And do not look at your profit and loss statement. This is something, I always advise all the new traders: don't look at your PNL, focus on the process. Take such a position size that the PNL doesn't excites you. And ask yourself, if I'm scared, whether you are in profit or loss, I'm scared, cut down your positions immediately to half. Still again ask the questions, and the answer is just keep cutting down your position till you become more composed. Yeah, these are simple prevention tips which we take. As a trader, while we can avoid negative emotions throughout the process, while trading, we can learn to manage them by developing higher emotional intelligence. So IQ doesn't have any role in trading, but if you can control, if you have a very high EQ, you can be super profitable trader. Belief. You need to develop some belief. Belief are what we perceive as being true. Like you are on Forexways because you have a belief I'll learn something new. If probably you're seeing this seminar or webinar, you will see, yes, I have a belief that I can learn something here. So belief, you need to have that belief, yes, I can make money. The can attitude with belief, self-confidence. You know, the bigger the belief, the bigger the action will be. You don't trade the markets, you trade the beliefs about the market. You don't trade the markets, you trade the belief, the emotions of hundreds, millions of traders around you. So, do you have an ambition and goal? All the new traders try to write down a goal which is simple in, try to one step at a time. Don't think I want to make millions and millions, or I want to work for a hedge fund and all that. It's fine, but try to develop a small ambition and a goal. Have affirmations, have declarations. Yes, I will do this, I'll do this, I'll do. If I'm in a loss, what I will do. If I'm in profit, what I will do. Do you have map of your success? In your mind you need to have a clear cut map. Okay, this is what I want to be at this point of time. So once you have a goal, the mind will automatically start working towards these things. So self belief is basically these are few things. I am a consistent trader. I predefine my risk for every trade. I'm completely accept my risk. I'm willing to let go of the trade. I act on my edges. I act on my strategies, on my system. I pay myself as the market make money available to me. I continue to monitor my susceptibility to make a trading error. We are bound to do trading errors, and if you can monitor it with your heartbeat, with your thought process, with your emotion EQ, it will be an added edge to you. I understand that absolute necessity of these principle of consistent success, and therefore I will never violate them. These are the things which you need to take a screenshot and put it on your trading desk. Read them again and again till it becomes a muscle memory. Next slide. Again, these are certain beliefs, and these are the things which try to read it day in day out. So that will, these are very important. Anything can happen. Tomorrow it is up. Tomorrow it can go down. Every moment is unique. What has happened in past doesn't mean that it will happen in future. Random distribution of wins and losers. You can have 3 wins, 3 losers. You can have 10 wins and 10 losers. You can have 2 wins, three losses, 2 wins. So it's a random distribution, and an edge is an indication of a higher probability. It's never a certainty. Trading is all about how you deal with uncertainty. Market is unique at every moment, and that is where the trading system comes into play. That is a framework, that is a rule which will have your entry, exit, TSL, part booking levels, and avoid any kind of random trades. Money relationship, now this is very important. Money relationship, basically what you need to understand is what is your relationship. Some people love money, some people need money, and some sees it as a means to an end. So if you love money, you don't care about your PNL because you are at an abundant liquidity in your account. So even if you lose that amount of money, you can again come back to the market. Some people need money for paying their day-to-day expenses, so they want to make money from the market. And some people sees it as a mean to an end. So what is your relationship with the money is very important. As a thumb rule, whatever is the liquid cash available in your bank account, try to trade only 10% out of it. You will never be a fearful trader, because even if you lose that particular amount, you are not bound to, it should not affect your trading lifestyle. So, so money relationship is very important. Make sure that whatever capital you are trading with, it is part of your trading capital, sorry, your whole capital, so that doesn't affect your lifestyle. And without establishing a clear and valid purpose for achieving a financial goal, a trader may find it difficult to take a relevant decision to achieve their goals. And ask yourself question, whenever you face with any challenges, whenever you face with any losses, what are the lessons here? What are the learnings from this loss? How can I how can I learn from this, and what's not perfect yet, where I need to get an improvement? Whenever you have a loss, ask these questions. You'll know, okay, these are the mistakes I've done, and this is what I need to avoid. And you can read this book, Power of Identity by Rob Thomas. This will help you out. You will understand the importance of power of question. And never go into self-sabotage modes, unsettled quarrels, unknown and challenges. Where if you are facing these problems in your personal life, this will help you out. Trading is a reflection of your personal life. If you are unsettled in your personal life, it will definitely affect your trading also. And you need to develop that routine. So you need to develop a belief, you need to take action out of it, you need to see the results, again review it, and this cycle will keep on going. So basically, high quality preparation, effective execution, and constructive self assessment, these are the three things which you need to develop a routine on. And you need to develop a trading process, which is basically your trading plan and trading review. Trading plan basically means the way to enter, way to exit, way to put stop losses, and review. After the trade is over, you go ahead and review the trade, how the trade has performed, and how I can improve myself over it. This is a sample trading plan. You need to put a date, trading time, what instrument you are trading, stock, indices, currencies, or commodities, what time frames you have selected, and what is your trade setup, GAN, Astro, moving averages, price action, candlesticks. What is the maximum risk? Define your risk before you enter the trade. What is the trade result, winner, loser, break even, and what is the profit and loss? This is a very simple and crude trading plan which you can start implementing. And what you need to do it as a part of trade review, ask yourself these questions: was the trade 100% compliant? If no, what mistakes I did I trade according to my rules? If not, why not? What are the improvements there with me? What are my emotional feelings before, during, after the trade? And have I filled my checklist completely? If not, if no, why? Most of the people don't fill the checklist. Most of the people don't make a trading plan. They don't review the trade. Ask yourself why I'm not doing it. And if the reason is not, it's just an excuse, start from tomorrow and start making these things. And discipline. This is the most important thing. Having trading discipline is the beginning. Keeping discipline is the progress, and staying with the discipline is the success. Very important line. So discipline is very, very important. Discipline is the beginning, keeping discipline is the progress, and staying with discipline will only give you a good trading success to you. And as a trader, we need to continuously improve. Like in a wartime, soldiers are often told not to let their guards down no matter how victorious they were, as this is because you will never know when your enemies will strike again. Right? So similarly, you need to keep evolving, because markets, you are full of enemies. Enemies are hedge funds, your big traders. They are all there to take your money off. Right? So you need to be very well prepared. You need to keep evolving, keep learning. That is where the success will keep coming in day out. And whatever happens, take responsibilities. Yes, I am responsible, I will take care of it, I'll create my own destiny. When you start doing these things, you start being accountable, and when you're accountable, you're bound to make some good money in the market. And as a trader, we know that we are full of stress, so do a lot of meditation to de-stress yourself. Go for massage, acupuncture, eat a lot of vitamins, micro anti-antioxidants, herbal medicines. Physically, always do bath, sauna, or some physical exercise. Serotonin is known as the hormone of happiness. Laugh a lot. Spend time with your family and loved ones, which make you laugh, which make you feel loved. You will develop this serotonin, and you will become more less stressful. Ultraviolet, go to warm, travel to warm countries to get that ultraviolet rays. Food that promotes happiness is basically dark chocolates, honey, bananas, dates, figs, mushroom, peanuts. Keep eating them during your trading hours. It will keep you, energized. Laugh a lot, play a lot of sports. And these are some, conclusions. Don't have inflated expectations. Emotional trading leads to loss of money. Don't have emotional trading. Know yourself and your weaknesses. Human nature is immutable. Emotions drive most of the people, and that is where, if you want to be an emotion-free trader, develop a framework. And market is a possibility, not a guarantee. Market is reflection of all the trades, which all the traders you are taking. And this is the end. Champions aren't made in the gyms. Champions are made from something they have deep inside them: a desire, a dream, and a vision. Develop a desire, a dream, and a vision, and you will be a successful trader if you start following these processes. Thank you very much. Yep. I'm done.
Right. Uh,
Yep.
Thank you so much. Thank you so much, Ramesh, for the very insightful presentation you prepared for us.
Yep.
Honestly, what I love about Ramesh's presentation is focused. It is deeply focused on the mind, which is where trading success actually lies. Success in trading is all about controlling your mind, because at the end of the day, the biggest traitor you will always encounter is your mind. It's always the thing up here,
Yep.
most especially when you get excited in the charts, when you're down.
Mm.
And that is something that is truly captured by Bramesh, from all the stressors that we get, from all, everything that constitutes being in a trade. And if you're like me, and if you're like Ramesh, if you've been trading in the market, you probably felt it, being in a drawdown, um, winning a trade, losing a trade, and 100% of it. I know when you started out, you would always feel being disheartened, excited, but truly
Yep.
those feelings are actually just things that would drag us down. We should always live in a state of neutrality, right, Ramesh?
Absolutely. Calm and composed mind, Don't
Yeah,
feel excited. It's not if you want to feel excited, go to casinos. But when it comes to market,
right.
very calm and composed. Let the market, that is where you will be able to read the signals, what market is giving you.
Right. So it's all about having a clear mind to truly see what the markets wants to tell us. And with
Right.
all that said, Ramesh, thank you so much for taking your time, and explaining more about trading psychology. I mean, It's not every day that we get to have people who talk about trading psychology. It's all about trading strategies, and this one is an outlier that we should never neglect our trading psychology. It is absolutely 90% or not 80% of trading. It's all about the mind. Take care of
Right.
the mind so you get to take care of your account, right?
Yeah, yeah, that's absolutely very well summarized. Thank you very much for doing that.
Right. So anyway, thank you so much, guys. And once again, I am Aldrin from Forexways Live. See you guys around and happy traders.
Stay disciplined.
Yeah. Right.